Last August, gold hit an all-time high above $2,000 an ounce, leaving many investors wondering, can the magic be recreated this year? We are catching up with Mark Yaxley today. He is the managing director over at SWP, Strategic Wealth Preservation. They're a leading bullion dealer and a secure storage provider. Mark, good to see you again. Welcome to our summer series here on StansberryInvestor.com.
Great to be back, Daniela, and I hope you're having a nice summer.
So far, so good. I cannot complain. Mark, I'm happy you're joining me today to talk gold prices, because I've been getting a lot of calls from people saying, you know, what do I do here? Should I wait? Are we going to see a huge move up like we did last August?
You know, Daniela, I know this isn't necessarily what people want to hear. Everyone is always chasing that big number and new record highs, but I think that investors need to have tempered expectations for the remainder of 2021. A little bit of a transition period coming off a really great bull run. You know, we saw gold move about 36% from its low to its high during the last bull run. And silver doubled from $12.60 at its low in March 2020 up to over $28 an ounce. So fantastic runs. And, you know, unfortunately, those things can't go on forever. And it's completely normal and natural to see the prices soften a little bit after a run like that. And so I think the expectation for the next 6 months is really a range-bound gold and silver price.
Okay, so pretty tempered of a point of view from you, Mark. Let me ask you this. What is an investor to do here? You know, should they be waiting on the sidelines? How do you know when you should be getting in?
Well, that's the silver lining of the situation we find ourselves in, Daniela, is that when you look at the runs and then you see the pullbacks, you know, you might be a little bit disappointed if you're holding precious metals. But the good news here is that we have reached new support levels, both for gold and for silver. If you recall, we were stuck in a trading range for gold between $1,200 to $1,400 for like half a decade. And silver was somewhere between $12 to $18 during that same time. And now we've really busted out of those trading ranges and have found this support in these new ranges for gold. You know, anywhere from about $1,800 to $2,000, and silver now trading, you know, between $24 to $28. So the good news is that the support has been found in these new trading ranges, and that gives us hope and optimism as we move forward that we can find new price discovery. So I think for the investors and for myself personally, this is a time when I'm thinking about buying, adding to my stack, taking advantage of this pullback and these softer prices, getting set up and getting ready for the next run, hopefully that we'll see in 2022.
Mark, any feeling or sentiment as to why gold wouldn't be able to recreate that magic? Because, you know, the demand seems like it's there. And if we look at the economic environment, it definitely seems like a turbulent one where gold should be rallying here.
I agree. I mean, there's definitely fundamental economic concerns. Those concerns that were there even pre-COVID remain. But I think that the investor support or the investor demand has softened a little bit. We've seen signs of that inside of the industry over the last 3 to 4 months. The demand is better than pre-COVID, but we are seeing, you know, the phone is ringing less often, less online orders. So it's a reflection of that demand starting to soften a little bit. And something to keep in mind too, Daniela, you know, we tend to forget as investors, especially when it comes to silver, is the industrial side of the argument as well. Industrial demand for silver in 2020 was actually down 10%. So while we were all experiencing this great bull run and we were focused on the investor demand, the industrial side was actually very quiet. And that's because a lot of companies had closed down or were getting less orders during the pandemic, and their demand for physical silver actually dropped. So there's also that industrial demand that's starting to ramp back up, but it takes time to catch up. It takes time for the global economy to get going again. So there is some optimism there, definitely from the industrial side. But I think we lack a little bit of oomph from investors right now to really push us into new price discovery.
So Mark, maybe you can help me with this then, because we have dampened gold prices right now, as you said. Yet if I'm looking across the board at premiums, they're still relatively high vis-a-vis the prices. Now, yes, they've come back down than what we've seen, you know, during the height of COVID. But why this disconnect here? And for the folks back at home who are not aware of premiums, it's what you're paying for physical metal above the spot price.
Right. We are seeing a divergence between the spot price of gold and silver and the product premiums, the premiums that people are paying for these physical products that they're taking delivery of. So I think that generally the premiums follow the spot price. As you noticed last year, as people were, the spot price was moving up to those new record highs and towards $30 silver, the premiums for physical products also follow. There's a little bit of a lag time, but they tend to follow the spot price. And the same is true now. The spot price has softened and we're starting to see the early signs of premiums coming down, which is good news for investors, but they're nowhere near what they were pre-COVID, which tells us, Daniela, clearly that there's still strong demand for physical products. And that's really what I love about premiums is they can't be manipulated. You know, you hear often people talking about price manipulation and the price of silver especially being suppressed, but you can't suppress premiums because premiums are the way that dealers compete with each other. Dealers across the board cannot compete on the spot price. Everyone is showing the same spot price, but where they can compete to get new business, to get more clients buying from them is on premium. So they will basically sell at the lowest premium that they possibly can and still earn a living. So what it tells us is that since premiums are still maintaining a relatively high level, there is still strong support for physical metals. And that should give investors some comfort, again, that these new ranges, these new price ranges we found, they're here to stay. They're likely here to stay. And so they can sleep easy at night knowing that the downside for their investment is limited right now.
Right. They can't manipulate premiums. I hear what you're saying, but on the flip side, do you think it's fair when you see premiums jack through the roof and some dealers taking advantage?
You know, I don't know if it's fair or not. Premiums are only that high because there are investors lining up willing to pay them. If the investors stop showing up to the shop or they stop calling, trust me, those premiums will fall. And that's kind of the point I was getting at. Do I think it's fair that spreads get a little bit wider during a bull market? Of course not. But the reality is refineries and suppliers will take advantage of hot markets to make an extra spread on their products. But again, those will come down and they already are starting to come down now.
Okay. On gold and silver?
Gold has definitely come down significantly. You're starting to see products available again for anywhere around 3 to 4% premium over the spot price, which is more or less its normal range, maybe a point or two higher than you would expect. But silver, I'm still seeing silver eagles at somewhere between $8 to $10 over spot. But I do expect investors will see those premiums come down in the near term.
Okay, offline, you were educating me about a trend that you're seeing happening in the precious metals world here, which is borrowing against metal. So can you tell us a bit about what's going on and why maybe people should be taking advantage of this in today's environment?
Yeah, I think it's really interesting, Daniela, and it's important to talk about things like this because, as you know, our industry doesn't change very quickly. There aren't revolutionary new ideas every day. This is a business that's been around 6,000 years. So when something new and exciting does pop up, you know, it's important that we share it. And so one of the things I've been seeing come across my desk recently and across the industry is the ability for investors to borrow against physical metals that they have in storage. So the knock on gold and silver for forever really has been that it's not an income producing asset. It doesn't pay you a dividend. It doesn't pay you interest. And so a lot of pundits will use those two detractions to really punch gold and silver. But what this new service allows people to do is actually access equity that's tied up in their precious metals. So those metals that are sitting in a vault somewhere can now be borrowed against as collateral. People can borrow anywhere between 50 to 75% of the value of their gold and silver, take that cash and then invest it in something else. Like it could be cryptocurrency, for example, if you want to diversify your portfolio. It could be real estate, which is, you know, typically always a good investment, or you could just double down on precious metals. So it's a really interesting way for people to access money that is tied up and use it to their advantage and still retain ownership of the gold and silver.
Interesting. So are you seeing more and more of that at SWP, like requests for that?
We've just actually started talking about launching a program at SWP. So we're just a short while away from offering this, but it's something that has existed in Zurich and Singapore for a few years now. And what I think is really interesting for investors to consider if they're saying, hey, that sounds like something that, you know, I might be interested in doing, is if you think about it, since you remain the owner of the gold and silver that you're borrowing against, you can offset the cost of the loan just by the gold and silver appreciating over time. So as the term of your loan wears on, the appreciation in the price of your gold and silver will actually help offset the cost of the loan. And also the new asset that you've chosen to invest in, hopefully you've chosen wisely, will also help offset the cost of the loan. So I think it's really kind of a cool thing that people should consider, especially if they're feeling like their money in gold and silver is a little bit tied up right now.
Let's wrap now, Mark. I started talking about gold, but let's bring it home with silver. I want to know if you think that if Wall Street silver is working any magic on the silver price here.
Yeah, I've really become quite fond of the Wall Street silver movement. At first, like everybody else, I wasn't quite sure what it would amount to back in February when I started to see the Reddit headlines, but I had a chance to speak to them recently and really have been looking at the work they've been doing. And I have to say, Danielle, and I'm sure you would agree, in the 16 years I've been working in precious metals, I've never seen this kind of community spirit, this energy that they're producing around silver, especially the visibility that they're giving this kind of from a community perspective. And they're very inclusive, and they're also giving a lot of, some advertising and a lot of YouTube videos and a lot of social media activity. And it's really getting new investors interested. And to me, ultimately, that's the most important thing. I think that silver is beneficial. I think you should own some. And I think that they're really shining light on that metal, which is great. Ultimately, will they disrupt the gold and silver market? Will they push out the big players? Will they squeeze them out of short positions? In my opinion, I don't think so, but I don't think that really matters. I think what matters the most is the positive light that they're shining on our industry and bringing new investors to the table, and those investors will benefit long-term. I think that's great.
That's really well said, Mark. And I have to agree. I mean, you and I have been in this industry for probably too long now, but they definitely have brought a breath of fresh air and a youthfulness back to the industry. And yeah, they've brought attention to silver. So hey, why not, right?
Absolutely. I mean, it's something that our industry has struggled with a little bit over the years. You've heard me gripe about it a little bit, but it's great to see young people, get excited about something. And if we can be a part of that, then absolutely we'll play our part and try to educate investors along the way.
You always educate me. So thank you, Mark. And I hope our audience enjoys it as well. Stay safe, stay cool, enjoy the rest of your summer. Come back soon, okay?
Thank you, Daniela. Great being here with you.
And thank you all for watching. Don't forget, if you want more exclusive content, to sign up free at danielacambone.com. In the meantime, that's it for me.